Okay, well, those of you that are waiting for the presentation to begin, we will start at 8 o'clock Eastern time. Just want to let you know we are here. We're kind of waiting in the wings, so we're going to wait and give everybody a chance to log in. There is a place where, as we go along, if you have questions, there is a place where you can type in questions below the presentation screen. Be patient, because I'd like to finish the presentation first and then go through the questions. That'll give Jade the amount of time he needs to complete his presentation. So hang on, and we'll get started shortly. I've got somebody texting me, so let's see what they're up to. I should probably be playing music in the background. I would sing, but that would drive people away.
We just have the Banks and Shane's song on a loop.
Yeah.
Is Minion okay?
Yeah, it's on it. Where's Kelly?
I sent the invite to Kevin too. I don't know. I'll unmute now.
Oh. Anyways, folks, if you've logged in for the presentation tonight, it'll begin in just about a minute. We're going to give enough people time to log in, since it's not supposed to start till 8 o'clock Eastern time anyways. But we're here, and we're just standing by and giving everybody a chance to log in. Yeah, my wife is passing me notes. You're going to need a bigger piece of paper here. Oh, good. Yeah.
You might want to answer and get rid of them.
I can only answer orally. I can't type a response to them.
But get rid of them that way.
Oh, okay.
Get rid of the messages. It's going to scroll up.
Got a couple of questions from Paul up in Jacksonville that I'm going to answer and dispose of those. Paul, I appreciate your letting us know that you can hear us. And yes, on this system, the recording starts as soon as I press start the broadcast. So yeah, That was a problem that we had with the old system. Sometimes people would forget to push the start recording. All right, well, it is 8 o'clock Eastern time, and I think we'll get going here. Jade has a great presentation waiting for you. Welcome everybody to the FAIRtax webinar. It is September 20th, and this is hosted by Florida FAIRtax Educational Association, but it is for everybody. Tonight's presentation will be by Jade Walle, and I'll give you a short bio on him. Ron Malero and Randy Fisher are standing by. We're also volunteers with the Florida FAIRtax Educational Association. The previous webinar was done on a monthly basis, and there was these two guys in Orlando, Larry Walters and Mark Maneri, and they did this for 10 years. 10 years of doing a monthly webinar. And then for a variety of reasons, they both had to back out. We are trying tonight a brand new system. They were using GoToMeeting. We're using something called Webinar Ninja. It's new to all of us. We've been doing a lot of practice sessions, and we've learned something about this system every time. But we're on a 14-day free trial. So we would appreciate comments from you if you think it's working well, or something should be changed or something like this, because like I said, every time we use this, we're learning something new. So feel free to extend your comments. And also, please, I'm not going to turn the chat on right now, but there is a place to put questions if you have questions about the presentation or anything else. But again, I'll repeat myself, I'm going to hold answering the questions until after Jade is done with his presentation. Jade Walle is a partner in a big four accounting firm, or a public accounting firm. He's been an accountant for 22 years. He's relatively new to the FAIRtax, but being a CPA, he's been able, I remember him telling us when we first met him that he was able to read the research papers. Now, I have to admit, I've been doing FAIRtax stuff for 9 years. I have not read the research papers because I can't. But Jade has. He's read the books. He's read the research paper. He's become extremely knowledgeable. The FAIRtax guys, FAIRtax Power Radio, we've interviewed him several times. Always a pleasure. So he's a true FAIRtax supporter and believer. And to have somebody that with that kind of background is, beefing us up here is truly appreciated. And he has agreed to do this webinar on a quarterly basis. So we're going to have this webinar every 3 months. So Jade, I'm going to turn it over to you, and you can tell the audience what you're up to tonight.
Yep. Thanks, Ron. And can you hear me okay, Ron? Coming through okay?
Yeah.
Yep. Okay. Well, as you get the slides loaded up there, I might set the stage for everyone. So
yep. That's true. I got to get the other one up there.
Tonight we're gonna, we've got a real special treat because Ron and his lovely wife Elaine have discovered a time machine, and they brought back news clips from the future when the FAIRtax actually gets signed into law, if you can believe that. And so now, of course, if time permits, Ron and Elaine will discuss their now detailed knowledge about the JFK assassination and discoveries about Elon Musk actually having already used the time machine for his own recreational purposes. But mostly we're going to cover the FAIRtax here. And as a point of information, we'll stay in the real world for a second. This presentation will unfold in the future with virtually all of the statistics and effects of the FAIRtax on the U.S. economy, businesses, and individuals based on 20 years of very extensive research by many leading PhDs in the field of economics, such as the former head of Harvard's economics department, to name just one. The 21 million of grassroots research makes the FAIRtax Act the most researched piece of potential legislation in the history of our country. So we have an extensive field of work to make these predictions upon. By contrast, when we think back to the last part of the 2017 cycle with Congress and the Congressional Budget Office, they'd have to scramble to create economic analysis based on proposed changes to the tax law that was being proposed. It was a hot mess. One of the great things about the FAIRtax is that the research is baked, it's vetted, it's corroborated and verified several times over. So from this point onwards, we're jumping into the time machine, but being constrained by reality. Rest assured that the headlines we've captured from the future are not imaginary fabrications or wishful thinking. To the contrary, when competing economic studies have differing results, we tend to default to the more conservative estimates in this presentation, which, as you'll see, are still incredible and mind-blowing. So let's climb aboard and head into the future here.
I'm trying to go to the next slide and it's not going. So here's our first glitch.
Oh, that's okay. Well, I'll try to drag the slides over, Ron, if that'll help. Yeah, I can't move them either, Ron.
All right, let me bring that up again.
Well, I'll kind of talk a little bit through the agenda while you try to work on that, Ron.
Sure. Yeah.
So we're going to kind of, when you see the agenda slide when we get up, we're going to talk about two main facets here in the future that news clips that Ron and Elaine have brought back. One is kind of the time just leading up to FAIRtax passage, and then the year and years following FAIRtax. So in our scenario here in 2021. Just after the 2020 presidential election, the 117th Congress passes the FAIRtax Act, finally, and the president signs the FAIRtax into law. So for reference, we're currently at the tail end of the 115th Congress, and in January 2019, the 116th Congress will be sworn in. So it turns out the FAIRtax actually gets signed into law in the first half of 2021, just after the next presidential election. So who knew it would be so soon, but for most of us, it wasn't soon enough. Now, as stipulated in the FAIRtax Act, the FAIRtax Act effective date is set for January 1, 2023. So it's always set for 2 years following the first year of the congressional cycle it's proposed. So today we'll walk through the news clips brought back from the future that show exactly what occurred when the FAIRtax became law and what occurred in that period after enactment. So again, I know we don't quite have the slide yet, so we'll just bump right into early 2021, and we'll catch up on the news clips here in a second. So the FAIRtax was about to get passed in 2021, but some well-intentioned congressional representatives put forth amendments to exclude food and medicine from the consumption expenditures that are subjected to the FAIRtax, an exception, if you will, to the FAIRtax Act's general requirement to include the FAIRtax in the retail end-use consumer cost of all new goods and services. The thought was that this would lessen the burden on America's poorest families and be a more fair solution. But people from across the U.S. who had, for the past number of years, applied extreme pressure by letter, phone, and personal visits on the congressional representatives to co-sponsor and ultimately vote for the FAIRtax Act's passage, again rose to the occasion. They produced an outcry that reminded enough of Congress how the prebate keeps the FAIRtax fair, and even more progressive than the income tax when you really look at the math and get granular. Now, one of the foundational tenets of the FAIRtax is that there are no winners or losers with the FAIRtax, but rather it's a lobbyist-free act that is intentionally simple, straightforward, and thanks to the prebate, eminently fair. The potential for future lobbying and tinkering with the FAIRtax and the resulting uncertainty that this would bring to individuals and businesses proved to adequately dissuade Congress from acting on these proposed amendments. Thank goodness. So now we'll move on, and the FAIRtax is finally passed. And so despite a massive, primarily lobbyist-led effort and extensive demagoguery, the FAIRtax is signed into law by the president, thanks in large part to the grassroots education effort across the U.S., where citizens literally educated their congressional representatives on how the FAIRtax worked. As each congressional office had 10 to 20 personal visits and many more letters and phone calls from FAIRtax supporting constituents, the House Ways and Means Committee finally took America seriously and voted the FAIRtax to the House floor. After this extensive educational outreach, the standard and predictable demagoguery. Oh, there we go on the slides. And Ron, I can't move those, so if you could go to slide 5.
Slide 5.
Okay, please.
Again, like I said, this is a learning experience. Okay, there we go.
Yep. And so there's massive demagoguery that the FAIRtax would hurt the poor and cause the cost of new products to massively rise. And this time it was more quickly dismissed as untrue. And future attempts to demagogue began being perceived as dishonest and a falsehood and a losing political strategy. So after passage, one congressman was quoted as saying that if my constituents had just reached out to me sooner, had come to visit me and wrote a few more letters on the FAIRtax, I would have investigated, saw its worth, and supported it years ago. So we'll move to slide 6. So we see the headline here in slide 6. The FAIRtax is finally passed. So here, a group of politicians who opposed the FAIRtax cited how the government would lose its ability, nay, its obligation to manufacture, guide, and direct our behavior as Americans. For example, tax breaks that purportedly encouraged home ownership, charitable contributions, and business investment. The government was worried that, hey, we're going to lose its ability to influence behavior. Fortunately, the massive grassroots educational campaign drowned out this false narrative, and Americans were reminded and overwhelmingly agreed that some of the most amazing inventions and advancements the world has ever known occurred in the U.S. prior to 1913, when the income tax became law. The examples are numerous and include, but are not limited to, the submarine, the telephone, the camera, the automobile, and aircraft, just to name a few. Many FAIRtax proponents harken back to one of Ron and Bob's FAIRtax Power radio episodes on these inventions and everything that happened before there was an income tax. So we move on, and Ron, can you move that slide?
Next slide.
Okay, so that was slide 6. And now go one further, please, into slide 7.
Okay.
So Ron, can you move that to slide 7? Thanks. So thanks in large part to playing the FAIRtax is Coming, the song on Ron and Bob's FAIRtax Power radio broadcast, the grassroots movement calls on the president to invite Banks and Shane from Georgia to the White House lawn upon passage for an all-night concert celebration. There were reports that this party didn't end until daylight, and that a certain former truck leasing business owner and school teacher, who now resides in Ocala, Florida, was nearly arrested for drunken and disorderly conduct at the all-night celebration. Luckily, his wife, who had gained near celebrity status for her video performance on the FAIRtax Power radio broadcast, did some quick talking and convinced the officers to give the unnamed assailant, a second chance, but only if she'd give the officers an autograph. Let's move to slide 8. So as we move to slide 8, now that the party has ended in late 2021 and throughout 2022, the U.S. government undertakes an education campaign as to how the FAIRtax will work, combined with the elimination of the income tax. The Social Security and Medicare FICA payroll tax repeal single-handedly eliminated the most regressive tax on the working poor in the history of the United States, as employees now keep their entire paycheck, free of any federal taxation, including the extremely regressive payroll tax. Notifications are also sent out to remind many of America's self-employed and small business owner ranks that estimated quarterly income tax payments beginning in April 2023, which would have been the estimated first quarter 2023 income tax IRS remittance, need no longer be made. So we'll move over to slide 9 there. So now instructions go out that every household is instructed to complete a form that is distributed by the new sales tax administering authority. This annual registration, which is required in order to receive the FAIRtax Act's family consumption allowance, also known as the prebate, is stipulated in the law, and the technicalities are as follows. So on this form that you have to annually register with, you have to have the name of each family member who shared your qualified family's residence, the social security number of each family member, the members whom the family consumption allowance should be paid. For example, should it go to the mom and dad, or just the mom, or just the dad? A certification that all listed family members are lawful residents of the U.S., a certification that all family members sharing the common residence are listed, so it's a complete list, a certification that no family members were incarcerated. So I think if you're in jail, you're not consuming in the economy, and so you don't get the prebate if you're in jail. And lastly, the address of the qualified family. And all family members, 21 and older, have to sign this remittance. After a massive U.S. registration campaign beginning in January 1, 2023, your prebate family consumption allowance began being mailed to every U.S. household or direct deposited into your specified bank account. And so for a family of 4, if we harken back to the old 2018 Department of Health and Human Services poverty guideline data, this amounted for a family of 4 of a $631 check each month, or about $7,500 a year. So we'll move forward to slide 10. And no more record keeping. So notice goes out to citizens as part of this transitional exercise that the U.S. Treasury's Sales Tax Bureau and the IRS now notify every resident of how the transition actually works. The notice highlights how the IRS will be disbanded, but maintain a limited complement of personnel, a very small portion of their previous 90,000 employees and $12 billion a year budget, in order to finalize outstanding audits of income tax returns filed up through the year 2022. Otherwise, all federal records related to the administration of the former income and other repealed taxes have to be destroyed by the end of 2025. That's 3 years after FAIRtax enactment. Timelines to complete all 2022 income tax returns are communicated, along with notification that 2022 is the absolute last year an income tax filing is ever required by law. Instructions highlight that in addition to no longer needing to file any income tax returns for the year 2023 and prospectively, that no payroll tax, estate, also known as death tax, alternative minimum tax, gift tax, capital gains tax, and all other income tax related forms and remittances are hereby no longer required. Lastly, the communications received highlight how the FAIRtax collected will be allocated around 27% to Social Security, almost 8% to Medicare, and 65% to the General Revenue Fund of the U.S. Treasury, as stipulated in the FAIRtax Act, thereby securing permanently and providing a solid foundation for the Social Security and Medicare safety nets that millions of Americans depend on. So we move to the next slide, 11. In here, instructions are issued to employers that on January 1, 2023, paychecks will no longer withhold nor need to remit to the IRS federal income taxes or FICA, including both Social Security and Medicare taxes, and employers will no longer need to remit their matching of such employee withholding taxes, which of course represented one of the first major business costs eliminated that led to embedded taxes falling out of the retail prices for new goods and services. The next slide, we see some more headlines in slide 12. Businesses of all kinds are also reminded that no tax returns are needed for them, including but not limited to partnership returns, S-corps, corporate tax returns, and the like. Similar to current practice, employers will continue to report wages to the Social Security Administration in order to calculate Social Security benefits. A copy of the employer's submission to the Social Security Administration must be made to each employee by the employer. This reporting of wage income by employers to the Social Security Administration represents the last remnant of any income that requires any record keeping whatsoever. And that's on the burden of the employer. So we move to the next slide. So now that the FAIRtax has been enacted and we've seen the lead up to living with the FAIRtax, let's take a look at what happened in year one of the FAIRtax and after enactment. So business productivity goes through the roof. Given newfound freedom from embedded tax costs and no corporate income tax burden, along with an extremely hot economy, businesses are using their newly discovered profits for R&D investment, coveting the next great tech breakthrough that will make the lives of Americans better or more efficient, as well as bonuses, pay raises, dividends to shareholders and other investors, and new factories being built. All facets of the American economy benefit. Another headline reads, given the hot job market and multitude of company expansion and growth initiatives, the 8.9 billion hours spent each year adhering to, researching, and complying with the 75,000 pages of IRS tax code have been quickly absorbed by U.S. companies, eager to retool former payroll or income tax accountants for more meaningful and advantageous work. So we move to the next slide of headlines, slide 14. Here we talk about the prebate. The 21 million in grassroots FAIRtax research that occurred from the late 1990s through today indicated that U.S. citizens' purchasing power would significantly increase when all the aspects of the FAIRtax enactment economy were considered. The headline discovered by Ron and Elaine gives us insight into the veracity and acumen of the economic results that these objective PhDs predicted. It reads, leading economists highlight how Americans' purchasing power has experienced a net positive effect, even after the slight 5 to 10% increase in the price of new products and services resulting from the inclusive FAIRtax. Specifically, since U.S. employees' paychecks are free of federal as well as payroll tax withholding, effectively in a keep your whole paycheck model, coupled with every U.S. family receiving a monthly prebate, as well as the base cost of new goods having been reduced due to liberation from embedded federal and payroll taxes, the net outcome has resulted in more money in American pockets at the end of the day, on top of a much more efficient tax collection system. We move to the next slide as we dive deeper into the economy. Our U.S. annualized GDP growth was 8% in year one after FAIRtax adoption. We about had a hernia when we got to 4% annualized last quarter, and people before that said 2-3% would be the ceiling forever. The PhD studies indicated, and it turns out to be true, 8% annualized GDP growth in year one. This unbelievable accomplishment, which has made the U.S. economy the envy of the world once again, is only eclipsed by annual GDP growth that eventually hits 11% by year 5 after enactment in 2028. An unintended but not unexpected result of enactment has been a dramatic increase in charitable giving. The headline discovered reads like this: despite FAIRtax opponents' admonishment that without the income tax deduction for 501c3 organizations, charitable contributions would plummet, charitable giving has actually significantly increased after passage. It turns out when Americans have more money in their pocket, they give more. This phenomenon corroborates the trend observed in the 1980s when the charitable contribution deduction substantially decreased as income tax rates dropped from the Carter to Reagan administrations. During this time period, when the charitable deduction was worth considerably less on the income tax return, charitable giving set new levels in the U.S. due to an expanding economy and growth at the time. Interest rates have now fallen on average 25% upon enactment. The embedded costs that U.S. banks have endured, such as income tax reporting, compliance, as well as federal income tax, employee payroll matching, etc., have all fallen out of the loan products that banks offer customers. The 8% loan and that 8% rate has turned into a 6% loan rate, which has worked to stimulate many other facets of the economy, such as business investment, new ventures, and real estate. As the working poor have shaken the shackles of the regressive payroll tax, and businesses are clamoring for more employees to handle the demand the growing economy is causing, wages are rising dramatically like America has never seen before. Real wage growth was 8% this year, in year one of enactment, which is an unprecedented accomplishment in a mature and high population economy. We move on to slide 16, and we jump into headlines about small businesses. One of the biggest winners with the FAIRtax has proven to be small businesses. These businesses, who employ more Americans than large corporations in total, are expanding their businesses and seeking out new business ventures, new product design, all the while attempting to keep their order backlog from becoming too long, a good problem to have. These small businesses are petitioning Congress for greater recruiting for qualified U.S. immigrants to help fill this pressing need. The National Small Business Association, as a previous endorser of the FAIRtax, was quoted recently in the Ocala Times as saying, "We're not the kind of organization to say, 'I told you so,' but when it comes to the FAIRtax and its effect on small business across America, I told you so." We move to slide 17. Now, the U.S. has become the world's tax haven. As the FAIRtax became law, the 0% corporate income tax rates attracted international companies to not only build their next plant in the U.S., but many have moved their entire headquarters to the U.S. The quote reads, "Ireland's 12.5% corporate income tax rate is massive in comparison to the 0%. And this is cited as one of the primary reasons for such a dramatic influx of new businesses to the U.S. However, another article highlights that now that U.S. businesses are finally on a competitive, level playing field with international counterparts, business is through the roof. This recalibration comes about because the cost of goods manufactured in the U.S. are now absent of 16% to 28% of their former cost base, depending on the industry, since the embedded corporate business taxes, for example, the employer's FICA matching tax and corporate taxes, are no longer a cost of doing business in the U.S. Since most America's competitors have a consumption VAT tax system, and those taxes are reimbursed to the company, for example, a European country upon export of those goods abroad, the elimination of embedded taxes from the cost of U.S. manufactured goods that are exported abroad is finally an apples to apples comparison and competition. A significant push for legal immigration has occurred given the fact that anyone residing in the U.S. illegally does not have a mechanism to collect the prebate each month and effectively ends up paying a much higher tax rate when they consume at the retail register. It's important to note that several large retailers who usually sold imported products from China, as opposed to goods manufactured in the U.S., were skeptical of the FAIRtax at first and in fact campaigned very hard against it. However, these large retailers who didn't have the burden of embedded taxes since the products they sell were not made in the U.S., they've warmed up to the FAIRtax because their company's revenues have reached record levels as the overall economy has spurred spending across the board. As the IRS was disbanded, over 90% of the former 90,000 employees were no longer needed in a governmental employee capacity. Best estimates indicate that including the former IRS employees, nearly 1 million accountants, CPAs, and IRS enrolled agents whose practices or employment was solely dedicated to the income, payroll, corporate, capital gains, estate, gift, or AMT taxes have lost their jobs. The vibrant economy, however, has gobbled up these resources, and there continues to be a shortage of qualified labor even after this massive influx. Another factor adding to the shortage of qualified labor is the fact that many of the larger and regional CPA firms have retained significant amounts of their former individual and corporate or partnership income tax experts to assist the accounting firms with record transaction and deals growth that has resulted from the booming economy and influx of companies to the U.S. These transactions require businesses to be audited, carved out, and separated for separate deals and other packages, with due diligence and other assurance and advisory services abounding. Also, accounting firms continue to employ a significant portion of their tax line of service related to international tax and state and local tax services, because of course those taxes aren't affected by the federal FAIRtax. We move to slide 18. When we talk about the IRS, it turns out one of the genius ideas with the FAIRtax is getting the U.S. government out of the collection business. A headline uncovered reads like this: since virtually all states already have a state sales tax and related collection mechanisms, including enforcement in the rare instances there is a substantial sales tax fraud, and since the FAIRtax legislation specifically calls for state collection of vendors' FAIRtax receipts, There has been hardly any expense at the state level. Further, the 0.25% collection fee that the states retain for their efforts has in some cases resulted in a net cash inflow at the state level. Also, as the vendors remit their collected fair tax to the states, the 0.25% retained collector's fee to the vendor appears to be covering any and all remaining compliance costs that retailers are burdened with. The article went on to highlight how out of the total of approximately 100 million US businesses, including sole proprietorships and small businesses, only about 2.5 million, that's 2.5% of all US businesses, are retail businesses that sell new goods and services that have need to collect and remit the national fair tax. The vast majority of US businesses sell goods or services to other businesses, which are completely free of any fair tax obligations, since the fair tax is specifically an end-use consumption tax that is collected once and only once when a product or service is consumed at the retail level. Of these 2.5 million US retail businesses, 1% of those companies make up 75% of the gross tax receipts. Consider the big box stores like Walmart and Best Buy, Macy's, etc. It turns out that 6% of these 2.5 million retail businesses make up 88% of the gross fair tax receipts, which has drastically reduced tax evasion at the federal level. We move to the next slide for some more highlights. On slide 19, we see civil rights, civil liberties, and governmental watchdog groups all concur that the elimination of the IRS and their nearly unchecked power to seize U.S. citizen bank accounts and property without notice, without probable cause, without due process, or the right to trial by a jury is a victory for the U.S. Individual citizen. Now, every person in the U.S. pays their full federal tax burden anonymously at the cash register as they consume new goods and services. Individuals and small businesses that are rapidly expanding point to reduced administrative compliance burden necessary for their families and small businesses, which included virtually all facets of personal and private information, from income, bank account, investment, home, car, medical, and education expenditures. Lastly, nonprofit organizations have been set free to freely exercise their First Amendment right to free speech, no longer burdened by the Johnson Amendment that became part of tax law in the late 1950s, when then Senator Lyndon Johnson orchestrated a scheme to silence organizations that made declarations against the senator. We move on to slide 20. One article reads, "The income tax base was essentially exhausted. The affluent did not want to pay any more and essentially reached their breaking point, while the political appetite to raise taxes on the middle class and working poor was non-existent on both sides of the congressional aisle. What the fair tax has done is turn the tax base equation upside down, since consumption comes from many more sources than income does. And as we see here, consumption comes from income. It comes from borrowing, savings, and even if you steal something and then go consume with those spoils, you're still consuming, and it comes from theft." We move on to slide 21. Okay, so this, when we get to slide 21, was the renowned Dr. Friedman, one of America's most noted economists. This was his quote on who actually pays the income taxes that are charged to businesses. So let's go to the headlines and flip to the next slide to see if Dr. Friedman knew what he was talking about. If he was correct, we should see retail prices dropping as businesses compete against one another. So here, retail prices have decreased dramatically, it's true, with the lifting of the previous income tax burden that was embedded into every aspect of a product's supply chain. Some critics questioned why prices didn't drop on average 22%, which Harvard's economic department had estimated was the embedded tax component of the average product. But market nuances, primarily including the fact that employee wages have not decreased as a component of business cost, but on the contrary have increased, ultimately have resulted in retail prices decreasing by a few percentage points less than the Harvard study indicated. We move to the next slide and talk about Social Security and Medicare. Both Social Security and Medicare are shored up with direct allocations of Treasury fair tax receipts. Currently, a small but potent subgroup of the U.S. economy, I call them the uber wealthy, like Larry Ellison, Elon Musk or Mark Cuban do not pay 1 cent into Social Security and Medicare coffers because they're not earning a wage via an employee paycheck, so there's no FICA withholding. With the FAIRtax, this has changed because despite uber wealthy people saving a great deal for the future, and remember, a way to think of savings is deferred spending. It eventually gets spent. They, on average, spend much, much more than the average working class American. And as a result, this small subgroup of the U.S. economy ends up paying more into the Treasury than they did under the income tax system. We move ahead to the next slide. More and more of our society is wanting to be green, especially in our millennial generation. What the FAIRtax has done, and the FAIRtax proponents knew it would happen, but it's a surprise to a good portion of America, is that thousands and hundreds of thousands of trees every year are saved with a reduction of the printing of millions and millions and billions of pages actually of income tax forms, income tax instructions, income tax returns that are printed, revised, reprinted, reviewed, revised, reprinted again. And this has had a dramatic effect on the environment, and it's had a dramatic effect on people's interpretations of how they're impacting the environment. And it's allowed a lot more people to understand how they're making a direct impact on the United States' carbon footprint. We will go to the next slide, college tuition. Obviously, with the expanding economy, college and university enrollment is more critical than ever. And under the FAIRtax, for the first time ever, all Americans are paying their college tuition with pre-tax dollars. So what that means, historically, after you earned income, you paid tax on it, you took what was left, say 70% if you were at a 30% marginal rate. 70% of your net proceeds could be used to pay for college tuition. Now you keep your whole paycheck and 100% of your money goes to pay for education. But here's the kicker. I call it the real rarity and the only real exception in the FAIRtax Act. Education expenditures are not taxed. You do not pay the FAIRtax on an education expenditure because it's deemed an investment. And so like other investments in the FAIRtax, there's no tax on investments. And so rightly, there's no tax on education. So this virtually cuts the cost of education in half when you think about the pre-tax nature of the expenditure and the fact that there's no FAIRtax paid on that educational expenditure. This also makes a dramatic effect to ending the debilitating cycle of poverty that so many Americans had been stuck in historically. It doesn't end poverty. The poor will always be with us, but quite a few, really hundreds of thousands and even millions break the cycle now because of this facet. We move to the next slide. We think about the incredible tax evasion that affects the United States now with our income tax system. I came across from this time machine that Ron and Elaine brought back a Wall Street Journal article that read, of the 2.5 million US retail businesses responsible for collecting the FAIRtax, 1% of those companies, or only 25,000 businesses, make up 75% of gross FAIRtax receipts. For example, the big box stores like we talked about. And this level, this magnitude of so much of America's tax receipts being concentrated with big companies has drastically reduced tax evasion at the federal level because companies with this level of magnitude, with large retail sales, trying to evade the sales tax is just unfathomable. And so conservatives and liberals alike hail the incredible collection results of the FAIRtax. And although the FAIRtax was a revenue neutral plan designed to bring in the same approximately $3 trillion or so of annual US Treasury receipts each year, the drastic reduction in tax evasion and the economic growth experienced has allowed our US Treasury coffers to be filled to the brim, reducing the annual budget deficit significantly. We move on to the next slide. Now, some of the volunteers for the Florida FAIRtax Educational Association fall into this group. We're talking about senior citizens, and you see the headlines there. Senior citizens have now stopped paying income tax or having income tax withheld from all of their Social Security benefits that they, by the way, already paid taxes on to earn that money back when they were in the workforce. Retirees also stop paying income tax on their plain IRA and 401k distributions taken. As a matter of fact, they have complete and unfettered access to that 401k account with absolutely no income tax consequences whatsoever. This has also resulted in an incredible economic stimulus and boom as it relates to seniors and retirees, because their spending is increased significantly because of this. Now, we've only touched on several, I'd say, important, but really only several facets. We could really keep going on for hours and hours on all the effects and all the news clippings that Ron and Elaine brought back in their time machine. But we'll move to the next slide, and we'll try to wrap up here and leave some time for Q&A. So in conclusion, I'd say I'd be remiss if I didn't let you know that when we went forward 2 more years in the time machine, we did learn that the sunset provision of the FAIRtax legislation did not come to pass. This clause, the very last clause of the FAIRtax legislation, called for unwinding of the FAIRtax and the reinstatement of the income tax if the 16th Amendment was not repealed within 7 years of FAIRtax enactment. The 16th Amendment was in fact repealed by Congress just 2 years after enactment, given the overwhelming popularity of the new tax collection system, with over 2/3 of Congress voting for repeal. The repeal was subsequently ratified by 49 of the 50 states, with California objecting to the measure, of course. That concludes my presentation, Ron, and let's open it up to Q&A.
That's it?
Yeah, let's open her up to Q&A, Ron, and see if there's any questions.
Okay. All right, let's see. We've got a few questions. Let's see. Randy is prompting people to post questions. Elaine has commented, great presentation. I don't see any other questions. So apparently, Jade, you were very thorough in in explaining all this. It was fascinating. I have a hankering to watch the movie Back to the Future now for some reason, but I don't see any other questions.
Well, Ron, while we wait a minute to see if any come in, I can tell you that all the statistics really that were presented are all based on, like you mentioned, those research papers earlier, those PhD studies. There are quite a few, and you can find them right on fairtax.org, and you go up, I think it's the research tab, and they have them broken down by very, very easily to understand subsections, like there's some on the economy, some on the prebate, and all the different facets. And so by really digging into those, and you see what going to a national consumption tax would do in the elimination of the income tax, these statistics that we threw out there, they seem very fantastical and almost too good to be true. They're real. They're based on real analysis that's completely objective and completely unbiased grassroots research dollars to fund these PhD studies. So I can verify that.
Randy has a question. He's posted a question here. It says, can you discuss the efficiencies to the collection process? I think you did, but and whether small retailers are likely to adapt in the service industries. Do you see this as a hurdle?
Oh, that's a good question. So what Randy's getting to there for the audience members is there's quite a few service businesses now that probably don't collect a sales tax. It's usually like a state sales tax. It's usually thought of and usually more common with products. So when you buy a shirt, but not when you go get an oil change. And that, we're maybe not used to paying a state sales tax on that oil change service, maybe on the oil, but not the service, the labor. And so now, as you probably heard me say several times, the FAIRtax is a tax on all new goods or services, because if you really look back from the 1940s compared to now, services as a percentage of total spending and total GDP has gone from under 50% to, I can't remember, like more like 60 to 70% of the economy. And if you think about your daily lives, it's true. We're taking our kids to dance lessons or karate class, and so the dry cleaning service. So much of what we do is a service rather than a product. And so the FAIRtax, again, because there's no winners or losers, treat products or services, whether it's internet, brick and mortar, online, or on the side of the street, there are no winners and losers. Everyone's treated the same, and all new goods and services must collect the FAIRtax. So does that create a problem for service companies who haven't collected it? I think there's a small amount. I won't say de minimis, but I'll say a small amount of compliance costs necessary there to get your sales register system, for example, or your software that includes the 23% inclusive rate in the cost of your service now. So when you go pick up that dry cleaning, to get that into the receipt and the register, so to speak. I think there's a little bit of transition there, to be honest. I don't think it's so significant that it would be a major hurdle. We look at all our retail stores that sell products, grocery stores, Macy's, Walmart, whatever it is, there's a myriad of softwares out there that are very cheap, actually, that you can run a small business on, that's a service to include that inclusive tax rate. So I don't see it being a significant hurdle, to answer that question in a very quick and succinct way.
Yeah, good. All right, we're starting to get a number of questions, so we're going to go through them here. Randy has another question. What can we do to get industry groups to move to this by exerting power on DC? Good question.
Yeah, that's a real good question. I mean,
that is a good question. One of our biggest challenge as FAIRtax volunteers that we've been doing is getting into small businesses. And one way you can approach the small businesses is through the service groups such as Kiwanis, Rotary, Lions clubs, because those clubs have a lot of business members. And it's the small businesses that create most of the jobs, is my understanding. So as volunteers, we try to get, presentations with these groups. That's one way of doing it. But having an education background instead of a business background, I can't, except for that, I can't elaborate any more on that question.
Well, Ron, you might remember when you interviewed Steve Hayes, the president of Americans for Fair Taxation, a couple of weeks ago. He cited an example when he just went as a volunteer to a meeting of industry professionals that included the Florida Real Estate Association president, and who he actually made a difference with, because they had been a significant opponent of the fair tax because they think it'll hurt their mortgage interest deduction. And he actually kind of changed her mind after he really got into the details with her. So I think it's things like what Steve did there.
Yeah, that's right. That was on an episode of FAIRtax Power Radio. Now, for those of you that are not familiar, Steve Hayes is the president of the national group. He's been dealing with the idea of getting rid of the income tax and replacing it with a consumption tax since the early 90s, which was before the fair tax was born. So he's got a huge, vast experience in doing, researching and answering these questions. So go back a couple of episodes in FAIRtax Power Radio and look at our interview with Steve Hayes, and he addresses exactly what Jade was just talking about. So let's, Elaine has a comment here. Great presentation. Can't wait for the enactment of the fair tax. Yeah, we all agree with that. Paul Livingston, what is the rate? That's a good question. What rate are we talking about here, Jade?
Yeah, so the fair tax rate based on all these economic studies, and Ron, I've got to admit, when you get into the footnotes of these studies, they have, those symbols from statistics class in college that we can't remember what they mean. They have those out the wazoo, and I can't understand it. But what they come up with to be revenue neutral, again, doesn't add to the budget deficit, doesn't bring in anything less. It just brings in the same amount of cash we're bringing in now. It would be a 23% inclusive rate included in the cost of all new goods and services. But remember, the purchasing power of everyone in America actually increases, you're keeping your whole paycheck, you get your prebate, and the embedded costs, these three things, the embedded costs fall out of the cost of everything we buy because the income taxes are gone and payroll taxes are gone. Those three things outweigh that 23% being added to the cost of all new goods and services. So net, you have more money in your pocket at the end of the day based on these PhDs, not based on, you and I hypothesizing.
Yeah. And also, I saw another email cross my computer the other day. Somebody had asked, has there been any recent re-evaluation of that 23% figure? And yes, actually, Dr. Karen Walby, who's our research director, we're lucky enough to have her and Steve and Randy on the Florida Board of Directors, and they're also on the National Board of Directors. And Karen, as I said, as the research director, she did a study about a year ago, came up with 22.8. A sales tax, as I understand it, a sales tax is a more stable taxing base than an income tax. It fluctuates less as the economy ebbs and flows.
Ron, that's exactly right. I actually didn't believe that at first, but I saw the empirical analysis. When you look at over time, over decades, they call it PCE, so personal consumption expenditures, which is measured relative to income. And you see the income line over the decades, it's going up and down like someone in a heart attack and a heart monitor. The PCE, the personal consumption expenditures, it's very flat and stable over all these different cycles of the economy over decades and decades, which goes to your point that empirically proves that that is true.
Yeah. Okay, Bob Paxton has a good question here. Bob Paxton happens to be my partner on FAIRtax Power Radio. Did the repeal of the 16th Amendment make state income taxes unconstitutional too? That's a good question. If Bob and I were emailing that back and forth, getting ready for our next broadcast of FAIRtax Power Radio, which, by the way, is a digital TV show now. So if the 16th Amendment is repealed, well, it's got to be repealed. And when it is, does that make state income taxes illegal or unconstitutional? That's a really good question.
That's a great question.
Yeah, and I can't answer it myself. I was hoping Randy would join us tonight as a co-host because he is a retired attorney, and I turn to him for questions like that. But that, I think, is going to be, oh, I see a comment pop up. And Randy says, no, they are not prohibited from direct taxation by the Constitution. Yeah, that I was kind of leaning that. States, by the Constitution, are the experimental laboratories, you might say. And the Constitution encouraged the states to do things like that, try different things like that would help them. But so if the 16th Amendment is repealed, it would be an income tax would be illegal or unconstitutional at the federal level, but not at the state level. Now, possibly what's going to happen is a lot of the states are going to feel the pressure when they do the state income tax. Like when we used to live in New York, you did your federal income tax first, then you did your state income tax, and it said, take figures from line such and such of your federal income tax return and put them in here. Well, if there is no federal income tax return, they're going to have to go it alone. So I think that'll put pressure on some of the states to transition to a sales tax. Although there are some states, as I said, in New York, where we used to live, where they have a sales tax and an income tax and a this tax and a that tax and all kinds of tax. So, Bob, that's a good question. Thank you.
Ron, I can take a couple questions I see here. One from Kelly Hassman, who happens to be my sister-in-law. Shout out to Kelly in Wisconsin. She asked, can you explain how it would affect college tuition? And so I look at it in 2 or 3 aspects. One, you're using pre-tax dollars. So you're keeping your whole paycheck. So you have all your money instead of, say, 70% of your money to pay college tuition. That's more. 2, the cost of college tuition drops because the embedded taxes, for example, certain taxes, now it might be a little bit less, but they still pay employees and have a payroll matching 8% tax that they remit to the federal government. So a lot of these taxes fall out. I don't think college tuition falls maybe as much as that 22% average based on the Harvard study, but college tuition goes down because embedded taxes fall out of the cost. 3, the cost of college tuition, when you write that check, there's not a 23% fair tax charged on that college expenditure. So if your college expenditure check is $10,000, which would probably be a cheap check these days, it's not going to be plus 23% or inclusive of 23%, because the fair tax is an investment in yourself. It's one of the founding principles of the fair tax, along with fairness, along with no winners, losers, along with you pay the fair tax once and only once. Along with these foundational principles, investments are not taxed anymore. It's only consumption, and education is deemed not consumption, but an investment in yourself.
Yep. Great answer. Okay. Oh, here's a good question from Eric Wolf. And one of the things about this new webinar platform, it does not allow us to make an attendee to unmute them. I asked the customer service, and we used to be able to do that with GoToMeeting, but we can't do it with this platform. So I apologize for that. But Eric asked, would illegal trade skyrocket?
Well, Ron, I've got an idea. Do you have any thoughts first?
I'm sorry?
I've got an idea. Do you want to take that first, or?
No, go ahead, please.
Well, I think it's a great question from Eric. I think there's as long as humanity is involved in anything, there's gonna be some cheating. And so we have to look at what is the best overall system that reduces evasion to the lowest amount possible. And the fair tax is winner hands down. And so will there be evasion? Yeah, that lawn guy that comes over and maybe he's like, hey, pay me cash, I won't charge the fair tax, and just kind of go along with me, and you scratch my back, I scratch yours. There's going to be that. I call that around the fringes. When you look at those stats I laid out earlier, only 2.5 million businesses are going to be retail businesses in the U.S. And about 100,000 or so of those make up over 90% of all collections. It's just a lot of our expenditures are concentrated in a lot of big companies. And so are any of those companies ever going to cheat? Heck no. There's no way Walmart, Best Buy, Amazon, any of these are ever going to try and skirt. Maybe if it's by an honest accident. And so I think the vast majority of your expenditures just come in, the fair tax is collected. Will there be some, I think on the fringes, again, maybe some small businesses, maybe you have a very small business, but if you have a state sales tax certificate to be able to buy goods wholesale in your state, you're on the radar for collecting the fair tax, because guess who's enforcing the fair tax? Your state sales tax agency that already have mechanisms in place. So if you have a business and you're already registered in the state, it's too late to go rogue and have illicit, illegal trade. And the only saving grace is for those fringes, I'll call it, and the best sales tax evasion studies I've seen indicate maybe 2% evasion max compared to the income tax evasion rate getting in the 25 to 30% range. So it's night and day. But the one saving grace is, say you do have illegal businesses. Say you're the oldest profession in the world. And we all know what that is, right? The oldest profession in the world, they're probably not going to charge the sales tax on the receipt they charge John, for example, for services. But the saving grace is, as that oldest profession worker goes out and spends money and consumes, they'll pay their full federal burden at that time. It's really the person who benefits there is the customer, the John. So you're going to have that stuff on the fringes. So I don't know if that answers it enough.
Okay. All right. Thank you.
Trying to keep this a family show too, Ron.
Paul has a couple of good questions here. Paul Livingston in the Jacksonville area. Paul is a board member of the Florida FAIRtax, and he always asks some searching questions. Name the major problems caused by the present tax system. Why change taxing? Well, Jade did go over one of them, evasion. Evasion of the current income tax is a huge problem. It's costing each family, each household, over $5,000 in extra taxes and costs of goods and services. We're up around 20%. 1 in 5 people are not paying the current income tax as they should be. And it's only getting worse as people get better at evading.
Ron, you're right. And the recent Dr. Sebula study just last year showed that there's about $700 billion goes uncollected each year in the U.S. because of evasion. And guess what that's trending to by 2026 based on the analysis? It's trending to $1 trillion due to this, we call it the gig economy. More and more people don't have that traditional 40 hours a week, I get my W-2 and I pay my taxes job like in the 50s, 60s, and 70s. It's I do dog walking. Maybe I'm a barista at Starbucks, so I get one W-2, but then I do some house sitting, then I do some surf lesson instruction, and 70% of the stuff is off the books. And so it's more of a, hey, I'll just do this gig for a little bit. Maybe I'll go, do some scuba diving instruction for a while off the books. And so you get this trend going from 700 billion to $1 trillion of evasion a year. That, if you think about that, if we collected all that's evaded right now, which would virtually go away with the FAIRtax except for the fringes, we'd almost have a balanced budget because we're about $1 trillion in the hole each year in our spending right now. That single-handedly alleviates a huge problem.
There's a lot more problems caused by the current system. Jade mentioned some of them. Civil asset forfeiture, it's an unbelievable problem. And I think there's enough of them that we could do another webinar on them.
Oh, for sure.
Yeah. So I want to get to some of these other questions. All right. But that is a good, the major problems with the current system are many. Congress and the lobbyists, that horrible relationship there, evasion, loss of privacy, inefficiency. I mean, there's just a huge number of problems with the current system. And that sounds like the subject of another webinar.
Yeah. And Ron, just real quickly on that, I think one of the biggest things is the efficiency. We have a $5 trillion tax base now compared to a consumption tax base of $9 trillion. And you get consumption from 4 sources like we talked about: income, saving, loans or debt, as well as theft. And so you get 4 sources of spending when income only has 1 source, which is income. And there's just no way to expand. The problem is you can't expand that income tax base any further. It just won't fly on any direction. But consumption, you get all those folks that are in the country illegally, illegal underground economy, they all have to spend to live. So that's one of the biggest things in my opinion.
Yep. Here's another searching question from Paul. Is the FAIRtax guided by any principles? Yeah. Simplicity, transparency. All right. Paul, go ahead and answer your own questions, please. Post a comment. It's got to be simple. It's got to be revenue neutral. It's got to be transparent.
Yep. Good goods are taxed once and only once, and there's no winners or losers.
Yep. Yep. There's a whole lot of benefits.
It's funny on Paul's question, Ron, the AICPA, I think it was back in 2005. And for those who aren't CPAs, that's the American Institute of Certified Public Accountants. They were commissioned to do a study, like what would the ideal tax system look like? And they put out, I can't remember, 7 or 8 bullet points of the ideal tax collection system. It would be transparent. It would be fair. It would be efficient. It would be simple. It would be, all these things. And you look at the FAIRtax, it ticks every single one of them 100%.
Yep. Okay, Randy's got a question here. I'm going to a second question first. Do the questions and comments get saved to the webinar? Yes, as far as I know. And I asked the customer support people, okay, where do I find the recording for this? And they pointed me to the direction of, it gets collected in a past webinar. I actually haven't been able to find, like the recordings of our practice webinars. So that's another question to customer service, but they insist that the webinar is recorded and we will be able to download it and put it on our website. It'll be on the Florida FAIRtax website, which is fftea.webinars, which is fairly new. Let's see, my wife is passing me notes again here. Hopefully the study hall monitor won't catch her. See. What are you asking me? Anyways, I think everything that we're doing and saying is being recorded. All right. And like I said, if you go to, it's good, give us a few days, but FAIRtax.org is the website, and you'll find a section there for previous webinars, and it'll be in there. Okay. Finally, Randy has a website, a link to find a white paper on the education. And that reminds me, a lot of the questions that were asked and that Jade and I have been, and Randy have been answering, if you go to FAIRtax.org and at the top of the page, click research, and then that will take you to a page that has a whole bunch of white papers, demographics, business, and so forth. And there's just a lot of information. Remember, the FAIRtax has been thoroughly researched. They spent over $20 million of privately funded research to look into every aspect of the FAIRtax. These guys know what they're talking about, these men and women and so forth. There's probably no revenue bill in Congress that has as much research behind it as the FAIRtax. None. And as far as co-sponsors, if I ever had a chance to talk to Speaker Ryan, I would remind him that the FAIRtax has twice as many co-sponsors as his HR 1 did before they passed it last December. But a lot of research behind it, and you can find that research on fairtax.org under the research tabs, all kinds of things like how does it affect seniors, how are the businesses going to collect it, all kinds of stuff like that. So it's there, you just got to look for it. And I'm going to give another plug for FAIRtax Power Radio. Almost 4 years ago, Bob Paxton approached me. He was doing an online radio show. He's a DJ by previous profession. And he got the opportunity to start doing a FAIRtax weekly podcast or presentation. So he called me up and said, we need to do this together. He said, because it'd be much more interesting at two people interacting with each other. And his words were, instead of one person sitting there bloviating. So we started doing a weekly podcast, a half-hour podcast of FAIRtax Power Radio. And earlier this year, a few months ago, we have been extremely lucky in that some people in Gainesville that run what they call, it's a new studio called Big Daddy Studios, and they have invited us to do a live TV show. Now, it's digital TV. You don't find it on your cable channels or anything like that. But if we broadcast once a week, right around 11:30. Sometimes it's not exactly at 11:30, but we try to. 11:30 Eastern time, 11:30 a.m. Eastern time, and we do a half-hour show. It's live. We've interviewed Steve Hayes. We've had Randy on there. Bob and I are traveling. My wife was, FAIRtax Elaine was there. And we have a different subject, different aspect of the FAIRtax every week. On the live shows, we take callers, so we get callers from across the country. And as far as I know, it is the only weekly digital TV show on the FAIRtax in the entire country. So check it out. It's a good way. And then following that, that's broadcast on Wednesday. And then Friday morning, we take the soundtrack from that and make a podcast. So you can download it to your computer, to your smartphone, to your tablet. You can listen to it whenever you want to. So Bob has chimed in with another question here. So when you hear some politician claiming it needs more research, you know he's just blowing smoke. And I have heard that. I've heard our talk show host talking to somebody a couple of years ago who was running for state senator. And he asked him about the FAIRtax, and he says, well, I think it needs more research. You know immediately the guy has not done his homework, because you're not going to get much more research than what we have already. All right. John has a question here. I can only hear from one mic. That person is talking currently, just silence. Ooh, that's not good. Huh. Okay. Any other comments about, like I said, this was a new format for us, a new platform. One of my mistakes is I forgot, I didn't hit the share my screen right away. One of the difficulties, even though Jade created this PowerPoint, apparently, since I'm the host and he's the co-host, I'm the only one that can advance it. And it took me it took my wife to point out to me how I could advance the slides, because I had forgotten from our practice session, but she pointed it out to me. So I started advancing them. But a co-host who has a PowerPoint should be able to advance the slides, themselves on their own. So that's kind of a
really
weird way of doing
appreciate
things,
everyone's interest,
which I'll bring up with
either
customer support.
You're already a FAIRtax proponent, or
But
if
anyways,
you're
I
just
think
curious,
Jade put together
or
a
someone
good presentation here.
Appreciate
I
your
hope
time.
everybody enjoyed it.
I think the biggest encouragement would be, if some of these Congress just get a few people visit them,
we'll
right,
get into the
on one topic, even
problems.
just 5.
I'm not sure
they will
right
notice
now,
it. So
I'm the only
if you
one
like
talking.
what you're hearing at
Jade,
all,
you want to add anything to sum up what we're doing?
And if you get to that point, start out with a letter and an email and a phone call, and that moves the needle. And we get more co-sponsors. This is going to be a wave. Not a red wave or a blue wave, just a wave. Yep. There's no bias there.
Okay. All right. I'm having trouble hearing Jade, but it seems to be fading in and out. But I think that's cell phone problems. Yeah, if there's another comment, Jade, there. I believe that's from your sister-in-law. Yeah, and Bob Paxton says, that's all, folks. Time to go watch trains. Bob is one of the rail watchers. That seems to be a big pastime amongst some people. It's great. All right. Well, I think we've about covered it all. Folks, if you want to send us any comments about this, about the webinar, suggestions for next time, or if you want to comment on any technical problems or ways that you think it could be improved, because we have to make a decision here in a couple of days on whether we're going to stick with this platform or try another one. So you can send it to ocalafairtax@icloud.com. Ocala FAIRtax, that's all one word, OCALA, ocalafairtax@icloud.com. That's our email address, and we'll look at whatever you
Thanks,
send,
Ron.
your recommendations, your
Appreciate
criticisms, your comments, whatever, and we will let everybody know in about 3 months when Jade does another presentation. All right. But I think that's going to be it, except I'm getting another note here from what? Oh yes. Yeah, my wife just reminded me. Jade, happy anniversary. Oh,
Thanks,
jeez.
Ron.
All right. And I'm getting a robocall from a telemarketer on my cell phone. All right. Okay, folks, I'm going to wrap it up here. I'm going to push the stop broadcast button. So go ahead and, like I said, Ocala FAIRtax at iCloud.com. Be sure to watch FAIRtax Power Radio every week. And we'll let everybody know the next time we get a webinar going. So thanks for attending. Really appreciate it. And I hope you found it worthwhile. Signing off now. Ciao.